All right, let's talk about Aster. You've probably heard the name. It's a decentralized exchange that's been making some serious waves in the DeFi space. So, what's all the buzz about? Let's dig in and find out.
Okay, so this question, this is the big one, right? It really gets to the core of a massive headache in crypto trading. It's this constant tug of war that every single trader, you, me, everyone, has to deal with. And, well, this is exactly the problem that Aster says it has cracked. So let's break down this DEX dilemma. It all boils down to a classic trade-off, really. You're constantly choosing between speed and convenience on one side, and, well, who actually holds your keys on the other?
So you've got two main choices. On one hand, you have your centralized exchanges, your CEXs. They are super fast, super slick, really easy to use. But, and this is a big but, you have to hand over your funds to them. You know the saying, not your keys, not your crypto. It's a real risk. Then, on the other side of the coin, you have decentralized exchanges, or DEXs. With a DEX, you're in complete control. Your keys, your crypto. The problem? Well, let's be honest, they've often been kind of slow and a real pain to use.
So you can see the problem. The dream, the absolute holy grail for traders, has always been to get the best of both worlds, right? A platform that's fast like a CX, but secure like a DEX. And honestly, it feels like the whole crypto world has been waiting for something like this to come along.
And that's exactly where Aster steps onto the scene. Their whole pitch is that they've built this hybrid solution. The idea is to give you that lightning-fast performance you'd get on a big, centralized exchange, but with all the security and self-custody goodness of a DEX.
So let's get a clear definition here. What is Aster? It's a decentralized exchange where you can trade both perpetual contracts and do regular spot trading. But the key thing, their whole mission, is to make the entire experience feel as seamless and fast as using a major CEX, all while layering on some really interesting privacy benefits you just don't get elsewhere.
Okay, so this slide basically sums up their entire value proposition. We've already hit on the CX level speed and DEX level security. That's the foundation. But look at what else they're promising. Privacy tools, which is huge, and this one, capital-efficient yield. What does that even mean? Well, it means your money isn't just dead weight sitting there as collateral. It's actually earning for you while you trade. And to top it all off, they're not just stuck on one network. They're multi-chain, running on big ones like BNB, ETH, and Solana.
All right, so that's the big promise. But what does the actual platform look like? How does it feel to use? Well, Aster isn't trying to be a one-size-fits-all kind of deal. Instead, think of it as a whole toolkit built to serve everyone from a total beginner to a seasoned pro.
And this is actually really clever. They've split their interface in two. You've got simple mode for beginners. We're talking one-click trades, super straightforward. Then you have pro mode for the power users. This is the whole shebang, a proper order book interface, grid bots, hidden orders, all the advanced stuff. It's a smart way to try and capture the entire market.
And yeah, you're reading that right. 1001x leverage in simple mode. Now, obviously, that is an insane amount of risk, but it's also a massive potential reward, and you can bet that this feature alone has been a huge magnet for drawing traders to Aster.
Okay, so if you're going to offer that kind of leverage, you better have some serious protection for your users. And they do. It's called MEV protection. The simplest way to think about it is like a shield for your trades. In the wild world of DeFi, there are these bots that try to see your trade coming and jump in line ahead of you to mess with the price and profit off you. It's called front running. Well, this feature is designed to stop that from happening.
But wait, there's more. The toolkit just keeps getting deeper. Remember that capital efficiency thing? Here it is. You can earn yield on your collateral while your positions are open. That's a game changer. Plus, they've got privacy tools using ZK proofs, so you can hide your trade sizes and profits if you want. And get this, they even let you trade tokenized stocks, so you can trade real-world assets right next to your crypto. Pretty cool.
So you might be wondering, how on earth do they make all this work? I mean, these are some seriously bold claims about performance. And the answer, as it so often is in crypto, is all about the tech. And their journey here has been super smart. They didn't try to build Rome in a day. They started out as a multi-chain DEX, just an application running on existing networks like BNB Chain and Solana. But they hit a wall. To get the kind of insane speed they were aiming for, we're talking sub-second transaction finality and handling hundreds of thousands of orders a second. They knew they couldn't rely on someone else's tech. They had to build their own custom blockchain, their own layer 1, which they call the Aster chain.
Of course, at the heart of this whole ecosystem is the Aster token. And when you look at how the tokens are distributed, one thing really jumps out: the team's vesting schedule. Their tokens unlock slowly, over 80 months, Let me do the math for you. That's almost 7 years. That's a really long time in crypto, and it's a huge signal that the team is in it for the long haul, tying their own success directly to the success of the platform.
Now, we have to be balanced here. It's not all sunshine and roses. The analysis does point out a potential risk. A lot of the tokens are held by just a few early wallets. Now, that super long vesting schedule we just talked about is meant to prevent any sudden dumps, but it's still a concentration risk that could lead to volatility. It's just something you got to be aware of.
Okay, so we've talked about the tech, the features, the token, but does any of it matter? How is Aster actually doing out there in the real world in the super competitive DeFi space? Well, the numbers tell a pretty incredible story.
Let's start with total value locked, TVL. We're talking over 2.2 times billion dollars. That's how much money users have trusted the platform with. That's not just a number. That's a massive statement of confidence from the community.
And who's using it? Over 2 million people. Think about that. This isn't just some niche platform for DeFi degens. 2 million users means it's hitting the mainstream and has really broad appeal.
But this might be the most mind-blowing stat of all. At its peak, Aster processed over $20 billion in trades in one single day. That's not just big for a DEX, that's big, period. That's volume that puts it in the same league as some of the biggest centralized exchanges on the planet.
And what makes all this even crazier is the timeline. The platform only just launched in early 2025. The token came out in September. We're talking about explosive rocket ship growth in a very, very short amount of time, driven by smart moves like airdrops that keep everyone excited and engaged.
But okay, what's next? The road ahead is definitely not going to be easy. They're up against some fierce competitors, like Hyperliquid. Everyone is watching and waiting for the full launch of their custom Aster chain. They absolutely have to deliver on that promise. And beyond the tech, they've got to manage their token emissions and really prove that this whole trade and earn idea can create real long-term loyalty, not just hype.
And that really brings us to the final big question. Aster has managed to bundle up privacy, speed, and yield, 3 of the most desirable things in DeFi, all into one slick package. They've got the numbers, they've got the tech roadmap, they've got a massive community. But the real test is whether they can convert all this incredible momentum into something permanent. Can they become a true, undeniable staple of DeFi? That, right there, is the multi-billion-dollar question.